Let's bring in now Premier Wealth Management's Martiak, also CNBC contributor Jim Irio. All right, Mark, my question has nothing to do with the markets per se. It's to the point we just made. The NASDAQ, multiple problems. Knight Capital Group, you got problems here. And yet we continue to power higher toward all-time highs, except everything but the NASDAQ, of course, every day. Why?
Don't fight the tape. As long as the tapering is off the table, there's no reason to not favor equities, especially if you're a moderate aggressive, or aggressive investor. However, I do caution my clients that you never lose money by taking a profit. Very, very simply, you need to be overweight equities right now simply because we're focused on the fundamentals and a lot of the headwinds have been dissipated.
You know, Jim, we talk a lot about how to invest during these two-day Fed meetings. In prior meetings, there was a lot of volatility, a lot of red in the market. It seems like everyone expects taper is off the table, as we just heard from Mark. But how are you expecting to invest during this two-day meeting?
Well, I thought a week ago and the week before that the market was primed for a pullback because we were coming to technical levels in the S&P, and it didn't happen. We chewed through. Even during earnings season is mostly over now. We're above those levels. It seems higher. But now we talk about these headlines of all-time high, and we've reached it in the S&P, we've reached it in the NASDAQ. Just talking about it makes people on the sidelines consider how expensive it is to sit out these rallies. And the glitches you talked about and the lack of confidence that have kept people on the sidelines make more money on the sidelines and might actually prove to make that last explosive move higher even more explosive. Okay. And I think we'll know when we put in the top and we see that.
I have a favor to ask of you, my friend, and this is an important one. I want to retire from now on the word glitch. All right, we're hearing that word way too much. Oh, it's a software glitch that shut down Medicare.gov. It's a software glitch, right? Okay, you own a restaurant now. If someone eats a burger and gets deathly ill, that's not a glitch. They won't, because your place is spotless and fantastic. That's not a glitch, though. You see my point? We're minimizing serious problems with language that doesn't represent what's actually happening.
There's no question about it. We'll use more dramatic words like a lack of confidence in the market, and that's what begins to happen. But either way, it doesn't matter because we keep marching higher because there's no alternative. What's pushing us higher? You look at rates. Are rates going up? I mean, that's the major catalyst. With rates at these levels, where else do you go? It's also attractive financing fueling buybacks from these companies, too. So everything keeps going higher, regardless of that G word that we keep talking about, regardless of some mistrust.
Well, Jim, Mark, we keep talking about a pullback. We haven't seen it yet. For months we've been watching for it, and yet we have some weakness in the economic data today. Mark, we got to end it pretty shortly, but I just want to get your take on what brings us to a pullback.
Well, I believe a pullback will probably occur, and for profit-taking purposes, sometime between now and the end of the year. But my prediction is for the Dow to go to 16,000. I think that's very realistic before the end of the year, or by the end of the year at the latest. It's trailing the S&P, and it's obviously trailing the Russell 2000. Respectively in terms of overall performance. So a pullback wouldn't be a bad opportunity for investors to take profits off the table. But I still think the market will continue to march higher.
Right, and we say that as the Dow is just within a stone's throw of its all-time record. But for now, Mark, Jim, we will leave it there.
Thank you for having me.